Welcome everyone, and thank you for joining us today for Anax Metals Investor Webinar. I'm Nicola Gazzatti of Investor Relations Consultancy Corporate Storytime. We're delighted to have Geoff Laing, Managing Director, and Andrew McDonald, General Manager of Anax, with us today to provide an investor update on recent exploration results and growth options for the Whim Creek Copper-Zinc Project. At the end of the presentation today, we will have a Q&A session. So without any further ado, I am pleased to hand over to Geoff and Andrew.
Morning all, and excuse me, thank you, Nicola. It's a pleasure to be here, and especially with my colleague Andrew, who will help us through some of the exciting exploration details. So we'll launch into it. I'll just give you an overview of what we'll be talking about. Clearly, we'll be talking exploration, but I just want to remind everyone of the key elements of the business. So that's focused around the strategically positioned processing hub. That's the key element of growth for us. So there'll be a bit of discussion around that. Obviously, our fully permitted Whim Creek project is the platform that will underpin all of that. The Whim Creek project itself, with the very robust economics that we demonstrated through the definitive feasibility study and other studies that have been carried out. And then, of course, the exploration side of things. So just to remind everyone, I'm sure everyone's aware, Whim Creek sits up in the northwest of the Pilbara, up in between Port Hedland, exactly halfway between Port Hedland and Karratha. I'll talk now a little bit about the project, and I just want to run through, I think some of the details of the project are important to revisit, because I think people forget just how simple the project will ultimately be in terms of the mining, the open pit mining, the fact that we've focused so much on the metallurgy. That's critical for these polymetallic projects. We've ticked lots of boxes there. But most importantly, we have all of the supporting infrastructure in place. So Whim Creek was built, the mine was developed by Straits Resources back in the early 2000s. They produced on this heap, you can see this is all the oxide ore. They produced about 70,000 tons of high-grade copper cathode with all of the infrastructure, the ponds, the SXEW, the offices, the workshops. When we acquired the project, all of this infrastructure came with it. The project needed some significant work. There was some legacy environmental issues that needed to be dealt with. That was the first order of duty for the Anax team. We came in and worked very hard to remediate and fix up those issues. And to be honest, I think the Department of Environment were amazed at how we got stuck in. It had been an asset that had been sort of left to languish a little bit. We fixed it up, and on the back of that, we had the environmental protection notice completely revoked, and we got the project fully permitted. The value of a fully permitted project with infrastructure cannot be understated cannot be overstated enough. And I'll come back to that when we talk about the consolidation strategy. But I just want to highlight some of the key elements of the infrastructure that's there. So we're permitted for in-pit tailings. We're permitted for a full oxide and sulfide leach project that will produce copper cathode and zinc sulfate. Most importantly, we're permitted for a sulfide project. That's what we're after at Whim Creek, chasing the sulfides that Straits never mined. There's a substantial resource base, 11 million tons at 1% copper, just under 2% zinc, and very healthy byproduct credits in silver, gold, and lead. That converts to just under 5 million tons of reserves at about 1.3% copper, 2.7% zinc, about 30 gram a ton silver. When you put that all together, we've got an 8-year mine life, the first 4 of which are open pittable, relatively low strip ratios, And we have a project that will deliver about 400 million in free cash flow with a very healthy IRR of 55%. How do we generate such a fantastic IRR? The reason that we do is because the pre-development CapEx is modest. So pre-development CapEx is only 70 million, and you can see why. All of the infrastructure is there. All we're having to do is build a concentrator, refurbish crushing infrastructure, and put in a pre-concentration plant, and refurbish the other infrastructure that's there. So low CapEx, working capital of 20 million, so all up about 90 million to get into production. And then when you put that together with high-grade open pittable ore at the beginning of the project, you deliver a very robust and frankly a fantastic IRR. And that means that the project is robust through a full range of copper prices and highly leveraged to upside copper prices ahead of us. So in summary, what we've got is a project with an 8-year mine life, will produce 12,000 tonne a year of copper equivalent, and infrastructure in place, fully permitted, ready to go on the Northwest Highway in the premier mining district of Australia, up in the Pilbara. What does that do for us? Well, aside from providing us a very robust project that we control, and I'll just mention at this stage, we have an 80% interest in this, and we share a 20% interest from Develop Global, who sold us the project under their previous banner of VentureX. So I'm going to move on now to the consolidation and the processing hub. Really, a key element in our business is delivering scale through the potential consolidation of other assets in our business. And Whim Creek is ideally located geographically for that. Here we sit, again, this is an expanded map of the Pilbara. Here's the Northwest Highway. The orange tenure is our tenure. The processing infrastructure sits right in the middle of it. We sit within this base metal province. There's about 10 resources within what we call the Pilbara base metal province. And they're all VMS style deposits. These deposits tend to be modest in scale, reasonably high grade. That makes them absolutely ideal for consolidation. The other key thing to remember in this consolidation strategy, and I obviously talked about it before, permitted infrastructure. This is the only permitted infrastructure in this region of the Pilbara. Once again, we're permitted for both sulfide processing, our core business, but oxide processing. That oxide processing is critical in this consolidation strategy. And that's a good segue into just discussing some of the specifics. So we have previously spoken about the work that we're doing with our joint venture partner, Develop. So Develop have the Sulphur Springs project, which is about 150 kilometers from us. Sulphur Springs has not been mined previously, so unlike Whim Creek, oxide has not been extracted and processed. And there's the ideal opportunity there for us to work together, for us to process high grade, and it's very high grade oxide and transitional material from Sulphur Springs at Whim Creek. I'll just highlight that what we've been looking at is obviously the ore that sits outside of the Sulphur Springs reserves that they're currently looking at putting through a concentrator. But it delivers a fantastic outcome potentially for both Develop and ourselves. And I'm just going to go down to the next slide because I just want to highlight, and we haven't, probably don't talk about this enough, but again, probably one of our specialities is the processing side of things. We have worked with Develop. We've already done some metallurgical work on their oxide and transitional ores. And we've demonstrated that it's highly amenable to leaching. We've been working with the CSIRO on our own leaching technology. The leaching of oxide and transitional ores is substantially less complicated than leaching of sulfide ores. However, we will apply our consortia of bugs to the leaching of sulfur springs ores, as we have in this test work, we generally got in excess of 90% leaching of the copper and well above 90% on the zinc. The great thing again with all of this is that leaching zinc produces zinc sulfate. That's a superior product to zinc sulfide concentrates. That's a feedstock for the fertilizer business. And we're doing a lot of work on that. That's potentially a real additional value to both our project and the developed project. We've also been talking to a number of other people in the region, but more specifically Green Tech, and we've let the market know that we've got an MOU in place. I'll just jump back to the map. So here, Green Tech sits on our western border, if you like, close to Karratha. They're about 100 kilometers from us as a crow flies. They sit close to the Northwest Highway, and the logistics of moving ore to Whim Creek would be relatively simple. Wando has a mixture of oxide and sulfide ore that may be processed through Whim Creek. So those are the two focal areas at the moment. We're running a number of studies with both of them. We're looking at the economics. We're looking at the logistics. Those two alone could see us jumping in production at this copper hub to 20,000 tonne a year of copper equivalent. That's the aspiration, to turn Whim Creek into a facility that can process 20,000 tonne a year or more of copper equivalent. And, that sort of sees us in a completely different league. And the returns on that will be significant. You get economies of scale. Once again, our partners get the benefit of permanent infrastructure, in-pit tailings. So really a very good outcome for all. So that is what underpins the growth strategy. And what I might do now is hand over to Andrew, who's going to take us through a little bit more on, you all would have seen the recent announcements on the drilling at Evelyn. We're going to talk a little bit, or specifically about Evelyn, and then a bit more regionally on what the exploration strategy is. So without further ado, I'll hand over to Andrew.
Thank you, Geoff. As Geoff mentioned, obviously our focus recently has been around the Evelyn area. I want to take the opportunity to just, put Evelyn in context of the larger Whim Creek project, where it fits in, and a little bit of background, which I guess explains where we're planning to go with Evelyn in the near future. So Evelyn's a VMS deposit located about 25 kilometers south of the main Whim Creek camp. We're proposing to develop Evelyn as an underground mine, around about halfway through the development timeline of Whim Creek. As Geoff mentioned, the initial phase of mining at Whim Creek will consist of open pit mining at Mons Capri and Whim Creek, the Whim Creek deposit itself. And Evelyn fits in really nicely halfway through that mining period, where we can develop the underground mine at Evelyn and augment what we would be processing from the open pits at that stage would be around mid-grade, 1 to 2% copper type material. And we can then mine Evelyn, which is a nice high-grade underground deposit, and we can augment that material, the medium-grade material, with high-grade material from Evelyn. So it fits in really nicely in our development timeline. Evelyn was discovered in 2007 by our JV partner, or rather the earlier incarnation of our JV partner. They were called Judd Resources at that stage. And I mention this because at that, around about 2009, Judd Resources rebranded to VentureX and acquired the Whim Creek project, and then later the Sulphur Springs project. And obviously, when they were able to get their hands on Whim Creek, which is, as I mentioned, 25 km north of Evelyn, Evelyn started taking a little bit of a back seat. But in these initial phases, Judd Resources certainly did some very good work at Evelyn, which included some detailed field mapping, VTEM geophysics, followed up with some fixed loop EM. There was ground mag done. And so we're the beneficiaries of a lot of this high quality work that was done, but a lot of it not really sufficiently tested or followed up on. So our exploration efforts at Evelyn are currently twofold. Firstly, we're looking at resource extensions at Evelyn and really wanting to follow up on a standout intersection we had in 2022, where an RC hole, which was the deepest RC hole that we drilled there, intersected 13 meters at about 4.5% copper and over 3% zinc. And so we believe that the Evelyn chute is still open down plunge, and we've just completed 4 diamond holes, which is the first phase of testing for resource extensions at Evelyn. The reason why we went with diamond holes is we also wanted to acquire some structural information to help with further targeting, as well as geotechnical information to help finalize some of the design work for the underground mine. As I mentioned, we're planning the initial visual results and initial scans from the mineralizer, and I just want to touch base quickly, or mention quickly, mineralizer is a continuous XRF scanner, and so I just want to highlight that it essentially takes a continuous scan of the core, about a 1 centimeter wide width, and then in 10 centimeter increments, and then puts those all together into 1 meter intersection. So what we have released thus far is not as good as geochemical assays, but they are fairly close and should give a reasonable indication of what we can expect from assays. As mentioned, that the processing of the rest of the core is currently in progress, and we are planning on some follow-up RC drilling in the not too distant future. If I can just move on to the next slide. The second part of the Evelyn exploration is really around the more regional side. Most people would be aware that VMS deposits occur in clusters, and at the Evelyn area, the Evelyn deposit's at this stage the only one that's been discovered. Based on some of the previous work that was done by Jut Resources, there are numerous untested or insufficiently tested VTEM and fixed loop EM targets, and those are really the priority for us to follow up on a regional basis. Some limited drilling away from the Evelyn deposit has intersected copper up to 0.7% near surface, but our belief is that the drilling that was done at those areas was too widely spaced to sufficiently test those targets, and our plan is at this stage to do some additional soil sampling and some auger sampling around those untested or poorly tested VTEM targets to try and refine where we could do some RC drilling in the near future, and those would be obviously fairly near surface targets, which we're very excited about testing. I'll move on to the last one, and then I just briefly want to mention a couple of the other priority targets that we're focusing on. Firstly, Salt Creek, which is also part of our Whim Creek project plan. Salt Creek consists of 2 high-grade lenses that are both open down plunge. The previous extensional drilling that was done at Salt Creek intersected 8 meters at over 10% zinc on the eastern lens, and 19 meters at around about 2.5% copper on the western lens. That was the last drilling that was done, as I said, down plunge for resource extension, and those obviously present tangible targets and exciting targets for potential resource growth. And then another deposit, another area which is a little bit more away from, it's not resource extension work, but rather looking for a new discovery, is the Mons Capri South area. At Mons Capri, the depositional environment and the key stratigraphic unit is quite well defined. It dips to the south and sits under to the south of Mons Capri is overlain by a shale unit and then a volcanic unit. There's been some wide space drilling done around that Mons Capri South area, with all drilling intersecting strong VMS type alteration, and in particular one line of holes that was drilled intersected zinc up to 2% zinc in the key position, followed by a 300-meter step out which intersected 23 meters of zinc mineralization in the order of 1%, followed by another 300-meter step out, which again had a thin intersection on the key stratigraphic position around about the 2% mark. This really demonstrates that this area is still fertile, but at 300-meter spacing, it really is insufficient to test those targets or that area. And so we're planning on doing some more geophysics in that area to try and refine some further targets, and then obviously we'll need to do a bit of infill RC drilling in particular to to be able to help sufficiently evaluate this target.
Right. Well, thanks, Andrew. So I think it should be clear to everyone that the growth focus is very much there, both organic growth through the exploration and then the consolidation. I'd like to really wrap up by talking about schedule and what people can expect to see moving forward. And I'd really like to start that off with talking about project debt funding, which is obviously a critical part of our business going forward. So we have previously told market that we do have non-binding term sheets from both metal trading groups and mining funds. And look, I can say, we continue to have a number of very live discussions with both the trading groups and the funds. And we are looking to bed down the debt financing as soon as possible, and that should be a precursor to getting the equity financing in place. Look, it's no secret that the funding markets are extremely tough at the moment. Having said that, if you want funding, being in the copper space is, I think, the right place to be. If the activity from the metal traders is anything to go by, there's even more heightened interest from the metal trading side of things. And obviously the metal traders are the ones who probably have the best line of sight to when copper deficits are likely to happen. So we are working very closely, as I say, with both a number of metal traders and mining funds. And in terms of timing when that will be delivered, we would hope over the next 2 quarters. The funding is such a critical part of the business going forward that we need to make sure that we get the right funding. That's you can sort of live and die by the funding that you get in place. So that is the key focus. I think it's probably clear to you there will be more news flow on the exploration side of things. Certainly Evelyn is a fantastic opportunity. There's sort of walk-up targets for us to be looking at, talking about the consolidation. We've advanced studies. There's a bit more work to be done. We look forward to providing a bit more color around those, and obviously ultimately to talking about what deals can be put in place there. So we've got plenty going on. There'll be plenty of news flow coming up over the next quarter and couple of quarters.
Fantastic. Thank you both for your update. We'll now move on to the Q&A session. The base metal markets have come off a bit recently. Is the Whim Creek project well placed to deliver leverage returns, even in a subdued market?
I think that is probably one of the key strengths of Whim Creek. When you look at a project that has low capital entry, it's got high grade resources, relatively low strip ratios on the mining, and lots of byproduct credits to help pay the operating costs, is a long way around to say absolutely it's very robust. Again, back to the 55% IRR that we were talking about, it could deliver still a strong return in a copper price environment substantially below where we are at the minute. Our feasibility study was run at prices that are probably slightly below where we see them today, copper-wise. Obviously, the precious metal prices are compared to what we had in the feasibility study. So it means that the project is robust and remains robust even in a depressed and I mean, it's all relative, a depressed copper environment. Copper price is still pretty good, particularly in Aussie dollars. But it also is important to say that the leverage to the copper price, to where many of the forecasters are seeing it going, means that the 400 million in free cash flow very quickly jumps up to 500+ million in free cash flow as you see that copper price pushing up towards the sort of $10,500 a ton.
Thanks, Geoff. Our next question: what milestones should investors be looking out for in the coming months?
So yes, just sort of circling back to that, I guess, sort of schedule of events that we talked about, we will see a flurry of information on the exploration side of things. We will be looking forward to providing the market more insights into the consolidation strategy. And on that as well, we're talking to others in the region. So, it doesn't just start and end with development green tech. There are other discussions ongoing, so more information potentially on that. And then, of course, the big one is the debt financing side of things. And we would expect within the next couple of quarters to have definitive information on that.
Thank you. Our next question. Although the capital requirement for the Whim Creek restart of approximately 70 million isn't huge by industry standards, is it still a substantial investment in light of Anax's current market cap?
That's exactly right. It is still a substantial number. I'll just remind everyone that 70 million plus the 20 million working capital, we would expect, and on the back of some considerable work and discussions with financiers, that we would be able to do in excess of 50% of that as debt. And then also reminding everyone that we have an 80% interest in the project. So when you do the maths on all of that, the actual equity requirement is obviously substantially below $90 million. And, despite where our market cap is at the minute, in a somewhat re-rated market cap environment, the equity is indeed achievable. And I just, it is a good point to make. When you have a look at copper projects more broadly, and Australia is obviously a focal point for us, but there are very few other copper projects with a capital intensity as low as ours. Typically, what you'll see is lower grade projects, larger scale, with dramatically higher, and I'm talking about $500 to $1 billion type development costs. So I would say that we would have to be one of the most attractive, if not the most attractive, from a capital intensity perspective.
Thank you, Geoff. Our next question. What sort of debt and equity split do we envisage for the CapEx?
So I think the split will be sort of 50% or a bit more debt to equity. As I said, if you're looking round numbers up at 90 million for development, we would plan to get circa 50 million in debt and then do the balance in equity. And, again, say that's sort of on the back of having spent a fair bit of time testing the markets on this. So that's what we'll be targeting.
Thank you, Geoff. Our next question. How will you deal with the deleterious elements such as arsenic and mercury, which occur in the Whim Creek mineralisation?
That's a detailed technical question. So I think two parts to that. I'll let Andrew answer just how prolific or not they are within the resource, and then
look, arsenic and mercury are actually not that prolific. There's a little bit of mercury around the Evelyn deposit, which goes into the concentrate. But because Evelyn, when we process it, it makes up is a relatively small portion of that annual throughput. When you combine that with the copper concentrate that will be produced from Whim Creek or Mons Capri, it actually averages out to at or below penalty levels. So we don't actually see any substantial arsenic or penalty levels for mercury in the deposit at all.
And just, I guess, as an extension to that, we have, through our financial modelling, we have fairly carefully, as we've scheduled out the production. So you do get variations through the different ore bodies and through different domains as well. So you go through periods where you do see somewhat elevated levels. And the financial modelling has all been done on the basis of applying penalties to those periods where you do see slightly elevated levels.
Thanks to you both. Our next question. Do you have any theories on why the market is not ascribing a high value to Anax shares?
Yeah, that's an interesting question. I think safe to say the market broadly is extremely tough. Obviously, we keep a close eye on our contemporaries, and without exception, and particularly in the base metal space, share prices have come off dramatically. So I don't think that we're alone there. I do think that, which is why in this webinar, I have gone back and highlighted some of the key elements of the project. I think we need to just keep reminding the market of robustness of the project, the fact that it's fully permitted in the Pilbara. We're right in the sweet spot in terms of the commodity space. We have a joint venture partner that we can provide some potential upside through a processing hub. So, I think all of those key aspects we need to keep reminding the market of, because I think people tend to overlook that. And then build on top of that some of the exploration side of things. We are sort of really ramping up the ante on that, and we have, I guess, sort of previously been so much more focused on the project development side of things that the base metal exploration side of things hasn't had perhaps the level of focus that certainly hasn't that we're sort of putting in now. And so hopefully the market understands what that potential is, and we get some further uplift on the back of that.
Thank you, Geoff. This is our final question for today. Is the company sufficiently funded for the planned work programs over the balance of calendar year 2024?
So we continue to evaluate our financial position. Safe to say that we can always do with more funding. I guess that question and the answer to that question sort of depends on some of the activities. We're doing studies, as I mentioned, with our potential partners in the consolidation, and we're obviously doing some exploration. So we will continue to sort of evaluate that funding and make sure that we remain robust through this rollout period, particularly of securing funding for the main project. And so, I think we obviously told the market we have $4 million at the end of last quarter. And, I guess we're very careful in the way that we apply our funding. But obviously we are working on a number of work streams.
Thank you very much, Geoff. Do you have any closing comments you'd like to share with investors today?
Thanks, Nicola. I'd just like to thank everyone and especially some of our key shareholders that may be listening in, people that have supported the company. It has been a very tough marketplace to operate in. We continue to add significant value through all of the work streams that we are doing. I want to assure everyone that we are very focused on the debt funding side of things, but we are equally focused on these growth aspects. The growth aspects provide upside as we go through the development of the project. And, I think that having stuck our course with copper, we sort of came through an interesting journey last year where there was such a heightened lithium focus broadly within the Pilbara. And, we kept focused on the copper, and I expect that will pay dividends for us and our shareholders. And I'd just like to thank everyone.
We wish to thank Geoff and Andrew and the Anax team for the comprehensive update. And if you do have any further questions for the team, please forward them to info@corporatestorytime.com. Thanks everyone for joining us today. Thanks, Geoff. Thanks, Andrew.